Assalamu alaikum. My name is Mubeen zulfiqar. Our topic is equity report of Ghani Class Pakistan Limited. So we have three members in our company's presentation groups. So submitted by name Mubeen zulfiqar, Dildar Ahmed, Tayab Ali. Here are the some table of contents of Ghani Class Pakistan Limited. Here is introductions and investment summaries, business descriptions, industry overview, financial analysis, and valuations, market disclosures, ownerships. So, then first of all, the introduction of Ghani Class Pakistan Limited. Here is some introduction of Ghani Glass Limited. Firm name is Ghani Glass Pakistan Limited. In exchange of KSC 100 index ticker. Yeah, simple name is Ghani GHGL. Industry glass manufacturing and ceramics. Current stock price is 25.83 PKR. Main recommendation: should buy its shares. Recent news: Ghani Glass Limited announced its financial results for the fiscal year ending on June 30, 2023, posting are 37.6% year-on-year growth in net revenue. So, before we move to fundamental information, we go some background of Ghani Glass Limited. The Ghani Glass Limited, the company was incorporated in Pakistan in 1992 as a limited liability company under the Companies Ordinance 1984, now Companies Act 2017. Its shares are quoted on Pakistan Stock Exchange. The principal activity of the company is to engage in the business of manufacturing and sale of glass containers and float glass, following the business units of the company, including production facilities along with the respective locations. Here is a headquarter office and a registered office in Lahore, and here is some brief history. And Ghani Glass Limited is a subsidiary of the esteemed Ghani Group. Is a prominent player in the glass manufacturing sector, operating multiple cutting-edge facilities in the Pakistan. The report provides is in-depth overview of Ghani Glass Limited, detailing in history, operations, market presence, and future prospects. There's a brief history. Over founded over 5 decades ago, have involved into a diversified conglomerate with interests spanning various industries, including glass manufacturing, automobiles, and resource mining. The group ventures into glass manufacturing lead to the establishment of Ghani Glass Limited, which have stands in leading producer of container glass, float glass, and specialized products in Pakistan. Some board of directors, executive management team, and sales meetings overview we discuss later about organization structure. First, we will discuss about the manufacturing facilities, like what is container glass. Container glass facilities decline to producing glass containers for various industries, including beverages, pharmaceuticals, and cosmetics. Second is float glass specialized facilities for manufacturing flat glass used in construction and automotive application. Specify glass. Productive units focus on creating value-added glass products, catering to specify customers' requirements. Uh, Simply, it's what means about the container glass. Container glass is diversified range of glass bottles and containers. And next one, float glass, high quality flat glass, and in the architectural and automotive sectors. So, especially glass, customized glass products engineered for specific customer demands. So now we move the fundamental informations. Ghani Glass Limited, a Pakistan-based company engaged in the business for manufacturing and sale of glass containers and float glass. We already discussed about the glass containers and float glass. Now the company products include float glass, pharmaceuticals containers, and food beverages containers. Here is some financial performance of the Ghani Glass Pakistan Limited. Uh, In 2023 and 2022, we see about the financial performance. The net revenue, firstly, the values are in rupees in millions. The net revenue is 40,708 and in 22 38 to 7. Gross profit we are showing 11,281 and 9016 in 2022. Operating profit and profit before tax, profit after tax, and earning per shares, basic and dilute values. Now we discuss and seeing about in graphs valuations. Here is the net revenue. In net revenue in 2019 is 17,248. 2020 is 17,096. 2021 is 21,471. 2022 3827 and 23 40708. Here is the gross profit. Gross profit is simply as the revenue minus the COGS is equal to gross profit. Here is the gross profit of the Ghani Glass Pakistan Limited from 2019 to 2023. Here is a major differences according years to years, according to some problems and some major changes. We will discuss in the next parts how this changes was according to main these purposes. Here is the operating profit margin. Operating profit margin simply as a gross profit minus operating expenses equal to gross profit. Here from 2019 to 2023, operating profit margin values rupees and millions are shown below in figures 1.3. Here is profit after tax in rupees and billions from 2019 to 2030. This graph is just for good understanding what's the major changes in the income statement, profit and income statements, and what's the effect on the company. Here is the earning per shares for dilutes and basic dilutes. Here is 2019 to 2023 performance of earnings per share. Here is some fixed assets rupees in billions values in graphs showing is 2019 to 2023. Here is not major changes, but due to many changes in assets, fixed assets 12 to 20 and 12 8 54 in 2021 is 5237 and 2022 is 16 148 and 2023 is 16 8 67. What about simply we have explained about the fixed asset. Uh, Two type of assets is current assets and non-current assets. Current assets are 1 year's 1 year's performance and fixed assets more than 5 years. Yeah, you can simply say that fixed assets. Here is the total assets graphs is millions values. Total assets is equal to current assets plus non-current assets. Here is shareholders equity. Shareholders equity is part of the simply say as a part of the balance sheet, where first part is equal to assets is equal to liabilities plus capital. Capital is simply as shareholders' equities. Shareholders' equity is a shareholders' money that invest in the company for the future benefits. There is a some graphs of values of shareholders' equity represent billion from 2019 to 2000. And now shareholder equity is 1.23 estimated value. The beta value of Ghani Class Limited is 0.67. The beta value is a measure of a stock volatility in relation to the overall market. A beta less than 1 indicates that an investment is less volatile than the market, while a beta more than 1 that the investment is more volatile. In this case, Ghani Glass Pakistan Limited beta value suggest is less volatile than the market. Here is some highlights of the Ghani Glass Limited. Ghani Glass Limited is the largest glass manufacturer of Pakistan with 4 modern plants. The company enjoys with the highest market share in the containers glass and float glass categories and caters to almost 75% of the Pakistan glass needs in float glass. Here is the some investment summary where we can focus on investment summary. We see on price multiples in 2.1 tables. Here is price book value ratios, price cash flow and price sale ratio and price earning ratio in 2023 and 2022 and 2021. Price to earning ratio is simply as a measure to the ratio of the stock price to earnings per shares. Simply say as a price to book ratio simply as a stock price divided by book value per shares, and price to cash flow ratio simply as a stock price divided by cash flow per shares. And next one is a price to sale ratio. Price over sale ratio is simply as stock price divided by sales per shares, and simply as a price earning ratio simply as a stock price divided by earnings per share. So simply as price book ratio is 2.53 and 2022 is 4.08 and 2021 is 4.82, and simply as a price sales ratio 0.62 and 1 point over 11 and 0.54. Simply says as price book ratio simply as book values per share. Consider evidence just that the price over book value multiples are inversely related to the future rates of returns, and future cash flows simply as measures of cash flows include the free cash flow and operating cash flows. And next one is price earnings simply as almost frequently cited by the media and used analysis by investors. Uh, we already discussed about the formulas, and after we discussed these why price multiple values in 2023 is 2.53, in 2022 is 4.08, in 2021 is 4.82. We will discuss this later. Based on the price book ratio and price sale ratio, we recommend you to buy its share because it has a low variations. Low variation means a low risk. Now the key rationals matters. Uh, we discuss about the merits because we recommended to buy it here because it has low variation, mean low risk. Where company has low risk, you have a chance to invest in the company and taste the fruit of the profits. Here is the some market merits of according to key rationals of Ghani Glass Pakistan Limited results. Ghani Glass Limited is the largest glass manufacturer in Pakistan, catering to almost 70% of the country's glass needs. The dominant market position could provide a competitive advantage. Next, the second merit is diverse product portfolio. The company diverse product portfolio include float glass, pharmaceutical containers, allows to serve a wide range of industries, potentially reducing business risk. Based on the price, cash flow, and price earning ratio, we recommend you to sell if you have its shares because of high variation. High variation means a higher risk. Next, we move on the concerns, the figures 2.2. Industry competitions. The glass manufacturing industry is highly competitive. Changes in market dynamics and the entry of new players could impact of Ghani glass market share. Dependence on economic conditions. The second concerns of Ghani Glass Pakistan Limited. The performance of the glass manufacturing industry is closely tied to the economic conditions. Any downturn in the economy could negatively affect the company financially. Now, the other parts about the business descriptions of Ghani Glass Pakistan Limited. Uh, Pakistan Limited is discussed by the next members of Ghani Glass Pakistan.
Assalamualaikum, my name is Dildar Ahmed. As you know, we are talking on the report of Ghani Glass over there. As my group member also discussed the main points of its company. Now, it's my turn. I'll start from the business description here. Ghani Glass Limited is leading glass product manufacturer in Pakistan. And glass and ceramics industry, the leading firm is Ghani Glass and also included in the 100 index KC 100 index. The core business here I'll talk about the core business of its company. Ghani Glass Limited engaging in the business of manufacturing glass, selling glass containers and floor glass also. Here we see what the type of glass they are. The floor glass includes clear green, brown, reflective blue, ocean, and gray floor glass products, as well tempered double glass, safety glass, pharmaceutical containers in which we are packaging the medicines also, food and beverage also they used. The product, the safety things for the food and beverage and the shape of glass the company produced also. Uh, I'll talk about the business model there. Ghani Glass Limited operates 7 modern glass plants in Pakistan, producing content glass, floor glass, and value-added glass with an annual capacity of over 1570 TPD. Here I'll talk about little bit about the industry overview. The Ghani global manufacturing market was valued USD dollar 265 billion in 2022 and expected to expand at a 4.5 CSR from 2023 to 2032. The market is driven by increasing investments in infrastructure development and rising demand of all the consumer electronics. Market shares of key players also we can say the AJ including Firepoint Glass Industry Group, Guardian Industries and Semi-Open also. Uh, we'll talk about here the recent trend of the company here. In recent 5 years, the glass manufacturing industry has seen several trends. Companies are adopting eco-friendly production process. Means as the different type of crises are coming in the world, like global warming also. So all industries are moving to the eco-friendly production process. So the Ghani Glass also adopted eco-friendly process here. Now I'll move toward to the financial analysis of company. So I will here show you that how these ratios and how these analysis I will conduct in MS Excel throughout the financial statement of the companies here. So let's start from the first one ratio, profitability ratios here. The first ratio is gross profit ratio of the company here. So let's start. To calculate gross profit ratio, what we have done, we've taken the gross profit and then we have divided it with the total sale of the company in the year. By this method, we have calculated the ratio of the company gross profit ratio. For the operating profit ratio, we have done what we have done. We have taken operating profit of the company for the year, and we've done we have divided it with the sale of the company in the year. Now I'll show you how we calculate net profit here. For the net profit, the same profit we have adapted. We have divided the net profit of the company for the year with the sale of the company for the year. As for return on assets, what we have done, we have divided the net profit with the total equity here for the year of the company. As well as we have calculated the return on assets we've divided the total assets with the operating profit with the total assets here. With this process we have calculated the many formulas here. I'll show, and we'll say what are the difference within a years of the company. So for the gross profit in 2022, 21 was 22%, and 2022 was 29%, and 2023 was 23%, 27%. This shows from 2022, 21 to 22, the ratio has increased. In 2023, the ratio is a little bit decreased, which shows that cost of goods are increased, and so that's why the ratio is decreased little bit. For the operating profit in 2022, 21, it is 14%, and in 2022 it is 20%, and in 2023 is 19%. All the ratio shows that from 2021 to 2022, the ratios have been increased. In 2023, the ratios are decreased. The one big reason is that the cost of goods has been increased. That's why the ratios in 2023 are decreased. Here we have showed it with the help of graphs here. So that's why the investors should can uh, understand it clearly. The second ratio is liquidity ratios. Uh, first of all, I'll introduce this ratio a little bit. Current ratio shows that what the company has current assets to pay its current liabilities. So to calculate these ratios, what we've done, we have simply divided the current assets with the current liabilities here. And for the quick ratio, what we've done, we have taken current assets, then we have minus from current assets the inventory here. Then we have divided it with the current liabilities. The ratio we have gotten here. Let's see what are the difference and what are the cause of difference here. In 2021, it was the current ratio was 1.34 times, and in 2022 it is 1.54, and 2023 it is 1.88, and then the quick ratio in 2021 it is 1.29. For the 2022 it is 0.87, and uh, for the 2023 the quick ratio is 0.78. The This shows that quick ratio, the current ratio increased from 2021 to 2023, and the quick ratio has been decreased throughout these years. The cause is that the inventory, the ratio of selling inventory is decreased, and the inventory ratio has been increased throughout these years. Similarly, above what we've done process, we've also showed the ratios in the form of graphs here, so the investors can understand clearly. Now we've calculated here the gearing ratio. First one ratio is the financial leverage ratio. The second one is interest coverage ratio. In financial coverage ratio, we look at how much the percentage of a loan company have taken against the equity in the capital structure. And in interest coverage ratio, we show that what are the operating profit, how much amount of operating profit is to cover the interest here. So in 2021 to 2022, the ratio of financial leverage has been decreased, and 2020 and the ratio of interest cover ratio in 2021 to 2023 has been increased. So it is on the basis of gearing ratio and financial leverage ratio and interest cover ratio, the company performance is good. Now, it is trying to explain the efficiency ratio here. The same process we adapted in the Excel. All the formulas we have calculated here in the Excel for debt turnover ratio. What we have done, we have divided. We have Now I'll explain the efficiency of what. Now I'll explain the efficiency ratio of the company here, and also I'll show you that how we've calculated the ratio, these ratios here. The first one ratio is debater and turnover ratio. Second is the number of days in receivable creditor turnover ratio, number of days in payables, inventory turnover ratio, number of days in inventory, total assets turnover ratio here, operating cycle here. So let's start here. To calculate debater's turnover ratio, what we have done, we have divided the number of days receivable 35 days to the number of days receivable. Through this formula, we have got the amount of debitor turnover ratio here. To calculate number of days receivable, what we have done here in Excel. We have taken first the average. Uh, what we have done. We've taken the average of the amount of receivable of 2 years. We can take 1 year as a base year. But then we divided it with the sale, total sale. Then we have multiplied it with the year. Some companies use 360 days, but we have taken here 365 days here. Through this formula, we have got this ratio here. For the credit turnover ratio, what we have done, what we have simply 35 days, we have divided it with the number of payables here. To get the ratio of number of days payables here, what we have done, we've simply taken the average of amount payable of 2 years. We can take it as a 1 year here. Then we have divided with the sale, and then we have multiplied it with the 365 days. Through this, we have taken the amount of this ratio. All these ratios are performed in MS Excel with the help of formulas here. So let's talk about the main table of the ratio here. Debitors turnover ratio in 2021 was 16.09, and 2022 13.15. In 2023 it is 9.92. It means the number of receivables period are decreasing, which shows a good performance here. Number of days receivable in 2021 22 days, 2022 27 days, in 2023 are 36 days. The days are increasing throughout these years, which means a company are suffering from a very number of days late period ratios in here in this table. Credit turnover ratio in 2021 is 80 days, 80 times, and 2022 2.74, in 2023 1.88. It means the ratios are decreasing. So it shows, it means this ratio is a short-term financial source of financing. The number of the times are decreasing. It shows a bad performance indication here. Uh, Through this ratio and performance of company has been decreased throughout 2021 to 2023. So that was all about what we've done and what was my contribution in this project. Now I'll invite Mr. Tayyab Ali to explain here the valuation of the company here. Thank you.
Assalamualaikum. I will continue the remaining part of the project from the valuations of Ghani glass. I will show you how we can calculate the ratio of MS Excel, and I will discuss a different equity valuation ratio, and I will compare it with the big companies and industry benchmarks. So let's start from the ratio price. Price of ratio. Benchmark is 2.1 and the glass price book ratio 2.1, 2.5. Rajasthan Vilas Limited 1.0 for Silver Color 1.5 glass 1.9 and then global glass 0.5 and benchmark is 2.1 then glass and 2.5 glass. We के benchmark इन सब की रोज को total करके divide किया फिर तो इस पे average values is benchmarks. अब जिसकी वैल्यू बेंचमार्क से ज्यादा होती है टेक्निक्स है और जिसकी वैल्यू यानी कि वो जिसकी वैल्यू से कम होगी तो पिक्चर है तो इसमें कहते हैं अब company class की price book ratio 2.5 and price cash flow 6,892 price sale ratio 0.6 and price earning ratio 6.1. इसमें कुछ वैल्यूज हैं जो नेगेटिव हो जा रही है जैसे सारे 20 टाइम 4 पॉइंट और लास्ट लिमिटेड 19.9 और उसके बैंक जो 9.8 so both in the next was are used. Then last limited price book 2.5 price cash flow 6,892 price sale ratio 0.6 and price happening ratio 3.9 and here for industry benchmark. Price book 2.1 price cash flow 1 cash flow 1,420 and price ratio completely and price ratio in 5 into let's analyze that means and price will value from the glass limited to 5 which is higher than the industry benchmark of 5.3. This will include that data it values having I repeat that when the glass unit value 3.5 times and suggested that the market has high expectation for the company in the future. I think price cash flow of one glass limited is 6,892 significantly higher than the restaurant amount of 1,430 and this could indicate that the company strength is overvalued or it could reflect the market positive outlooks of the company future cash flow. Price ratio of the glass limited is 0.6 and lower than the industry benchmark of 2.5. So it is suggested that each increase of the company's values value less by the market, indicating that the stock may be undervalued. The price earning ratio of the glass limited is 3.1 higher than the industry benchmark 1.2. These show that investors will to pay a higher price for each piece of the glass limited earning reflecting the market of its view of the company and future earning growth. In conclusions, Ghani Glass Limited stock appeared to be undervalued based on its price sale ratio, but overvalued based on its price book and price cash flow ratio. Its price earning ratio suggested that the market has a high expectation for the future earning growth. Therefore, the sale, the stock will depend on an investor individual's investment strategy and this product. Investing risk. Investing in one glass limited like any other company carry certain risks. There are some potential risks to consider. Market risk. The performance of the value, the performance of the glass manufacturing industry and such tighter regulations and new down in the economic and active impact of the country financial performance competition. Recent glass manufacturing industry was highly competitive. Changes in market dynamics and enter of new year impact very glass market shares. Regulatory risk change in regulations or non-compliance with existing regulation could lead to or impact the company operations. Operational risk. Any discussions in that operation to factor like shortage, labor issues, or supply chain distributions could impact its profitability for high exchange risk. Since the glass operating on able countries keep it exposed to foreign exchange risk, any significantly fluctuations in currency exchange rate could impact its financial risk knowledge. And disclosure ownership. As of June 30, 2022, Ghani Glass Limited has a total of 39.9 shares outstanding held by 3,764 shareholders. The directors, CEO, or their spouse and minor child hold the highest stakes, 52.72% in the company. Local general public holds 36.78% of the shares. Material conflict of interest. There are no public reports material conflict of interest involving Ghani Glass Limited as of the most recent data available price to book ratio. And this ratio compare as company market. Thank you.